Good morning, good afternoon, and good evening. Ladies and gentlemen, boys and girls, welcome to the Middle East webinar jointly hosted by the DFSA, IESBA, and UAE AAA. It is so good to see so many familiar names in the list of participants. Thank you for your continuous patronage. I'm equally excited to see many new names who have joined us from various parts of the world for the very first time. Welcome. My name is Naweed Lalani, and I head up the Audit Oversight Unit within the Supervision Division of the DFSA. I will be your host and moderator for today's session. On behalf of the host organizations, I invite F. Christopher Calabia, Chief Executive of the DFSA, to formally welcome you all. Chris is an accomplished leader in financial regulation with a career that spans over 30 years in various public and not-for-profit sector roles. As an expert in banking supervision, Chris was previously responsible for improving supervisory effectiveness at the Federal Reserve Bank of New York, where he held a variety of specialized policy and supervision roles. He joined the DFSA on 1st of October 2021, welcome Chris, from a very senior advisory position at the Bill and Melinda Gates Foundation, leading its work to promote regulations that enable digital financial inclusion. Chris, over to you.
Hello and welcome. It's a great pleasure to be here with all of you today. And as Naweed mentioned, I'm still a newcomer here at the Dubai Financial Services Authority, having joined just earlier this month. It is an honor to join such an innovative and international authority that is building the future of finance and supervision in the Dubai International Financial Center, or the DIFC, as we call it. It's also an honor for us at the DFSA today to partner with the International Ethics Boards for Accountants, the IESBA, and the UAE Accountants and Auditors Association, which is the UAE's national accountancy body. And it's perhaps fitting for us to host today's event from here in the Middle East. Accounting as a profession traces its origins back as far as the days of ancient Mesopotamia, a place not too far from modern UAE today. Now, maintaining the highest ethical standards is a core value for us at the DFSA, and it's fundamental to ensuring the integrity of financial and ancillary services in or from the DIFC. Auditors play an integral role here, and these revisions to the IESBA code will strengthen independence requirements for auditors. And in this regard, we at the DFSA are proud to support the work of the IESBA in setting and upholding standards globally and as a public good related to an auditor's integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. The IESBA is entrusted with the preparation of international ethical standards that professional accountants throughout the world use. The DFSA requires auditors operating in the DIFC to comply with the IESBA's Code of Ethics. We reference the IESBA standards directly in our DFSA rulebook because we have found these standards to be so clear. Today, we're joined by excellent speakers from the IESBA, and I'd like to thank Caroline Lee, Deputy Chair, and David Clark, the Technical Advisor for the IESBA, for sharing their valuable time today with us to discuss the amendments to the IESBA's code in two important areas, namely non-assurance services, or NAS, and fee-related provisions. I want to take this opportunity also to welcome our participants who have joined us from 28 countries around the world. Your participation certainly demonstrates your commitment to ethics. I wish you all a productive hour. Over to you, Naweed. Thank you.
Thank you, Chris, for your warm welcome to the participants. Yes, we certainly have participants from 28 countries today. Today is the Global Ethics Day as well, and it can't get better than to celebrate it with this important webinar. And as Chris mentioned, we have two excellent speakers. First, we have Caroline Lee, who joins us from Singapore. Caroline is the Deputy Chair of IESBA with over 30 years of experience in public accountancy profession. She's a partner at KPMG in Singapore and Asia Pacific Head of Quality and Risk Management. She's also a member of KPMG International's Global Quality and Risk Management Steering Group. Thank you, Caroline, for your time today. Your time is certainly in high demand, as I understand that this is the third event you are speaking at today. So thank you so very much for taking your time out. Next, we have, I would like to welcome back David G. Clark. David joins us for a second time at a DFSA event. David, we do not repeat speakers that easily. And it demonstrates certainly the respect we have for you and the respect our audience have for you. So thank you for coming back at our platform. David is a technical advisor at IESBA, a partner at EY. David is the independence and conflicts leader for the Middle East and North Africa, MENA region, comprising 16 countries, and is part of EY's global independence network of professionals involved in public policy. Cam, we can have the slides now, but before I hand over to both Caroline and David, let me take you through the program for today. Over the next 20 minutes or so, Caroline and David will take us through the revisions to NAS and fee-related provisions of the IESBA code. And we will then move to a moderated Q&A based on the questions we received in advance during the registration. And finally, we will have an opportunity to pick live questions from the audience. I now hand it over to you, Caroline. Thank you.
Thanks, Naweed. Thanks for the introduction, and good morning, good afternoon, good evening, everyone. Welcome to this webinar. As Naweed mentioned, we will do a quick overview of the fee-related provisions and the non-assurance service provisions, and then we'll go into a moderated discussion. So, if you can move forward to the next slide, please. So, firstly, maybe if I can take the time to explain why the change has been made to the IESBA code in respect of the non-assurance services and fees, and why at this point in time. So the code itself provides a strong foundation in terms of independence, but it was felt that more work was needed to strengthen the international independence standards, especially as it relates to public interest entity audit clients, for several reasons. One is that there's heightened public expectation about auditor independence. Secondly, we also see changes in laws, regulations, and firm policy in various jurisdictions. As a result, the IESBA, in its strategy and work plan of 2019 to 2023, has decided that there is a need for us to strengthen certain guardrails around auditor independence. And as a result, the project on non-assurance services and fees was undertaken. So what we've put together is a comprehensive guide to steer auditors as they assess threats and actions in relation to non-assurance services and fees. And this project has been extensively informed by research and stakeholder inputs. So for example, in 2018, various roundtable sessions were carried out throughout the world in order to solicit inputs from stakeholders for the non-assurance services part of it. In terms of fees, we engaged an academic to carry out a review of various studies that have been done, and we also carried out a survey to survey stakeholders and get inputs into the project. We also had feedback from regulators that there was a need for strengthening the NAS and fees provision. And that feedback also came from our consultative advisory group and from the Public Interest Oversight Board. So the final standard in relation to NAS and fees were approved in December of 2020. And these were released in April 2021, and they are effective 15 December 2022. In relation to NAS and fees, there's a third piece, and that third piece relates to the definition of listed entities and public interest entities. So given that I mentioned that there was a view that there was a need to strengthen auditor independence as it relates to public interest entity audit clients, this other project was to look at what is the definition of a public interest entity. So that project is ongoing, and we have received 69 comments in response to our exposure draft. The IESBA is reviewing changes as a result of those comments, and we hope to finalize the PI definition project at the end of this year when we have our meeting in December. And whilst this PI definition project might have an impact on NAS and fees, within the extent code, there is an existing definition for public interest entities. And so we do not think that there is a need for us to hold back the effective date for NAS and fees as a result. Next slide, please. Going in now into the fee-related provisions. On the next slide, I will take you through each of these boxes. As to next slide, please. So starting with threats created by fees paid by the audit client to the auditor. In the revision, in the pronouncement, we make it clear, we articulate that there is an inherent self-interest threat that's created by fees paid by the audit client to the auditor. And in articulating this, we are not saying that the auditor should not be paid or should not be paid by the audit client. What we encourage and what we've developed is guidance that helps firms to determine whether the level of such fees would create a threat that is not at an acceptable level. So in most instances, we anticipate that it ought to be at an acceptable level because the firms are required to put in place a system of quality control. And that system of quality control will then safeguard the independence of the auditor as well. But in instances where the fees might be too high or too low, then there is a need for the firm to determine if there is a threat to its independence. And so the guidance has been strengthened in that area. In relation to the level of audit fees, what we have set out is that audit fee should be a standalone fee and should not be dependent or influenced by services other than audit. So there's a prohibition on firms allowing the audit fee to be influenced by services other than audit. In relation to proportion of fee, there's no specific threshold or cap. We do not think this is possible to introduce or set at a global level, but we have incorporated guidance for firms to evaluate and address threats created when a large proportion of fees charged by the firm or network firms are for services other than audit. On the next slide, going on to fee dependency. In the extant code, there's already provisions around fee dependency. And what we've done is enhanced safeguards for PIE and non-PIE audit clients. So in the case of PIE audit clients, after if the fee dependency hits 15% or more than 15%, then there is a requirement for safeguards to be put in place in the form of reviews, pre-issuance review. And that fee dependency of 15% can continue for a maximum of 5 years. After that 5-year consecutive period, there's a requirement for the firm to cease to be the auditor of the PIE audit client. There is a provision in the code that allows for an exception, and so those are we would expect that exception to be rare, and there are safeguards to be put in place as well. In respect of non-PIE audit clients, the threshold is 30% as opposed to 15% for PIE audit clients. So an audit firm cannot be dependent on its audit client for more than 30% if it's a non-PIE audit client for in terms of its total fee. And in the case of a PIE audit client, it would be 15%. In the case of non-PIE audit clients, there's no 5-year threshold, but safeguards have to be continually put in place. Lastly, we have provisions around transparency of fee-related information, and this applies to PIE audit clients. And that transparency is achieved through communication with those charged with governance about fee-related matters and public disclosure of fee-related information. So we would encourage the audit firm to have the client make that disclosure within their financial statements, for example. And in the event that the client is not willing to make that disclosure, then there ought to be a discussion with those charged with governance in order to determine what would be the best approach to making this disclosure and achieving that transparency. The code itself does not prescribe exactly where the disclosure is to be made, and it allows for flexibility. So those are the key revisions to the fee-related provisions. And now let me hand over to David, who will take you through on the key revisions related to non-assurance services. David.
Yeah, thank you very much, Caroline, and happy Global Ethics Day to everyone. Many thanks again to the DFSA and of course the United Arab Emirates Accounting and Auditors Association. Christopher for your warm introduction, Naweed for your warm and very kind introduction, and Caroline for that insight into fees and the provisions in and around those. But most importantly, to everyone who joins us today from all around the world, this gives us a great opportunity, I think, to discuss the very pivotal and important topic, which further bolsters the public interest, of course, and this is the project and now new provisions on non-assurance services. I will probably refer to it as NAS throughout this presentation, this very high-level presentation. As we, as kindly captured by Walid Naweed, I'm a technical advisor to the International Ethics and Standards Board, but I also had the pleasure of being involved, as Caroline did in the fees project, within the non-assurance services fees task force. And I continue to be part of the non-assurance services and fees rollout working group, which is really looking to promote the adoption and provisions through outreach such as this, and the development of non-authoritative material, which I'll talk a bit more about later. And on this slide, there are three main broad brushstrokes, and we'll look at very quickly the prohibition on services that might give rise to a self-review threat. There's some focus on the requirement changes in respect to communication with those charged with governance, and that is also applicable in the NAS space. And there are some focal changes with the subsections in 600, which really look at non-assurance services in more detail. Next slide, please. Slide 9, please, AS2. So let's get straight into it. First up is the self-review threat. But first, why so much focus on public interest entities and on the self-review threat prohibitions throughout the use of the self-review threat mechanism, rather than, as some regulators and some national standard setters use, a whitelist and blacklist approach to non-assurance services? This is a big step forward to address heightened public interest expectations, as mentioned by Caroline, surrounding public interest entities and the trust of users in audit reports and the opinions of the auditors themselves. But it's also an attempt to future-proof without the need for frequent revisions to the code when there are changing market expectations, which we see inherently in our marketplace within the Middle East and North Africa, differing commercial needs, of course, and emerging disruptions, much like we've just had with COVID, but also through the likes of technology and its impact through marketplaces. But it's also about promoting consistency, I think, in the application of the code, with a mechanism which is well understood, easier to implement, and also in a consistent fashion by firms. Before providing any non-assurance service to a public interest entity audit client, firms must determine whether the non-assurance service might create, and the distinction here, might, as opposed to will, is very important, as we'll see and discover, might create a self-review threat by evaluating whether there's a risk that the results of the non-assurance service will form part or affect the accounting records, the internal controls over financial reporting, or the financial statements on which the firm will express an opinion. And in the course of the audit of those financial statements on which the firm will express an opinion, the audit client or the audit team will evaluate and rely on those judgments made or activities performed by the firm or the network when providing those services. And thus, where a self-review threat might be created, the IESBA and the task force took a view that because a self-review threat cannot be reduced to an acceptable level, a firm must decline the provision of that service for a public interest entity audit client. And that also is a key distinction as well. This is regardless of materiality. This is an important point of that service in respect to the financial statements and audit planning. There is some limited exception, and I wanted to note this on the slide in particular for some services, but in particular for advice and recommendations, which might create a self-review threat. And that is for those advice and recommendations which relate to matters or information arising in the course of an audit. Those services might be provided, of course, as part of the audit itself or as part of a separate engagement. So just to reiterate, those advice and recommendations which arise from matters or information in the course of the audit will be permissible. Next slide, please, AS2. The next important change within the non-assurance services section of the code is the requirement to communicate with those with and gain concurrence from those charged with governance, like a permission, if you like, to provide a non-assurance service based upon the firm's own conclusion. And this is really about promoting transparency through an informed discussion with those charged with governance. And this discussion must be, and this is critical, must be prior to the provision of the service itself. So unless otherwise addressed by a predetermined process, a firm is required to inform those charged with governance of the public interest entity that the firm has determined a non-assurance service is not prohibited and does not create a threat, or that the threat is an acceptable level. And just to reiterate here, if a service creates a self-review threat or might create a self-review threat, you do not go to those charged with governance for concurrence. A firm must also provide those charged with governance of the public interest entity sufficient information to enable an informed assessment about the impact of the non-assurance service on the firm's independence. And finally, obtain concurrence from those charged with governance before providing a non-assurance service to an audit client PI, an entity that controls the audit client PI, i.e. a parent, or any entity that is controlled directly or indirectly by the audit client PI. Please bear in mind that when we reference PI, the term is inclusive of listed and non-listed PI audit clients. Ultimately, without the concurrence, a firm must not continue or continue to pursue and provide a non-assurance service to a PI audit client, irrespective of whether the firm itself has adjudged the service to be permissible. Next slide, please, Astu. With the advent of the self-review threat prohibition for public interest entities, there are inevitably some services which are outright prohibited for PIs, but there has also been some tightening and clarification within the code through these new provisions, and so that there are some non-assurance services that are prohibited for both PIs and non-PI audit clients alike. Those worthy of highlight are on this slide, but note that some of those prohibitions pre-existed the new provisions and others are now highlighted and clarified further. Let's go to the next slide, please. Astu. So this slide was originally intended for reference only, but I think there are some key line items on this one which are or which would be remiss of me not to mention, and these are about specific tax services. First of all, audit clients that are there is for all audit clients there is a prohibition for those services which are provided to promote or opine in favor of a tax treatment where the significant or only purpose is for tax avoidance. It's really important in today's age. A firm or network firm shall not prepare tax calculations of current and deferred tax liabilities or assets for a public interest entity audit client. This is permissible for non-PIs if the effect on the financial statements is not material. So to reiterate, materiality is still a factor when determining the permissibility of services for non-PIs only. One important clarification is that tax advisory and planning services for all audit clients do not usually create a self-review threat, and that gets some clarity and some prominence within the new provisions themselves. If that service, that is supported by a tax authority or other precedent, and this is kind of the highest degree of certainty, if the service has a basis on an established practice, being a practice that has been more or been commonly used and has not been challenged by the relevant tax authority, or has a basis in tax law that the firm is confident is likely to prevail. The other part of this whole equation for tax services is that it's worth pointing out that tax return preparation services are clarified in the new provisions as usually not creating a self-review threat because they're based on historical information and are subject to the review and approval of the tax authority itself. And so thus, the new provisions are not intended to prohibit this type of work. Next slide, please, Astu. Okay, IESBA is extremely committed to supporting the adoption and implementation of NAS and fees, and this is something in my 5-year tenure with IESBA, I can firmly say there has not been a greater effort than the work that's been ploughed into this. These are, of course, very pivotal provisions and pronouncements towards the public interest, and this is why it's getting so much attention. It has been the IESBA has also set up a NAS and fees rollout working group, of which I'm part, which is further and longer lasting commitment from IESBA towards these new provisions. IESBA staff, we're in the background on this call today, and they've put a monumental amount of work into producing supporting materials, and kudos to them. And along with the basis of conclusion, there are infographics, a series of short YouTube videos on each of the key topics, webinar recordings, including after this one itself, and very soon some dedicated frequently asked questions which are currently with the board for a review as we speak. So I encourage everyone to visit the ethicsboard.org website for more details. I think another strong IESBA commitment to the adoption of the NAS provisions in particular is that IESBA has given a very generous concession where even with the effective date set as for audit periods beginning 15th December or after 2022, those non-assurance services begun prior to this date for existing audit clients will be allowed to complete and conclude going forward. Again, before I close, if there are any other regulators or national standard setters on the call today who might benefit from a further focused outreach, please do reach out to us directly. I thank you all for, again, your attendance in this call. I look forward to your questions in due course. And Naweed, without further ado, it's back to you.
Thanks, David, and thanks, Caroline, as well. I request both of you to be on the podium. We have a number of questions. We will now move to the moderated Q&A based on the question we received at the time of registration. And we also started getting questions from the live audience. So if you are still thinking to ask a question, those who are present here, this is your time. While we talk and discuss few questions received in advance, you can write your questions and we will try to answer. If the time doesn't permit, we promise that we will give you an answer. Your contact details are with us and we can engage you and provide you a response with. So the first question I have, David and Caroline, is when the same accounting firm provides audit and NAS, should the two fees from the same be weighted from an independence perspective?
Should it be weighted from an independence perspective? Was that the question, Naweed?
That's the question. So I think they probably asking that should they be combined together and see the threshold on the fee from that side.
Okay, so here we're talking about the proportion of fee, and in developing the revision to the fee-related provisions, IESBA concluded, as I mentioned earlier, that a threshold or a cap regarding the proportion of fees for services other than audit to the audit fee would not be appropriate in the context of a globally applicable code. But in general, the larger the proportion, the higher the level of the threat. And there is a need to apply professional judgment and to consider the facts and circumstances from the perspective of a reasonable and informed third party in evaluating that level of threat, whether the level of threat is at an acceptable level. So such facts and circumstances would include, for example, whether the service other than audit is a one-off engagement or is it a recurring service, whether it's likely that the audit fee will increase significantly because of an imminent acquisition by the client, or whether the auditor is required under law or regulation to provide some of those non-assurance services, for example. So all those have to be taken into consideration. The type of service, the nature, the purpose, as well as the fee. In some jurisdictions, they do specify a specific threshold or cap. And so in those instances, that calculation could be taken in the context of the firm itself, meaning the firm that's carrying out the issuing the audit report on the audited entity. But under the code, we are also looking at the proportion of fees, not just fees earned by the firm, but also from fees earned by firms in the network as well.
Thank you, Caroline. And one comment to all the audience and those who have asked the questions. As we are trying to answer your questions, If there are particular facts behind these questions, we recommend that you obtain your own advice with proper facts there. These answers should not be taken to comply with a regulatory requirement, because we do not have a complete picture and we do not advise on these. Again, the previous presentation was very clearly articulated, but now when we speak with panelists, the views they are expressing are their own. Neither EY, KPMG, or DFSA, or IESBA, or AAA are not bound by these views. So please take it with a pinch of salt there. Another question, again on NAS and fees together. How should a firm determine the amount of fee for a specific service? And the variation used is between firm quoted fees or firm charged fees, or the charge out rate. How to deal with fee variations and non-fixed fee for NAS? And it's a very common question when we read the standard.
So David, I'll take this question. So fee arrangements and methods of payments vary widely. And as you mentioned, what is quoted when it's billed, when it's charged would vary. And even if it's fixed or non-fixed, the timing of billing of maybe any overruns or variations would vary. So in our code, we did not believe that it was appropriate for the code to be overly specific in terms of how a firm should determine the fee and other types of remuneration. For example, specifying explicitly whether whether the firm should consider the fee quoted, charged, or paid in identifying, evaluating, and addressing threats to independence. So if we apply the conceptual framework requires us to have an inquiring mind. It requires us to exercise professional judgment, and it requires us to use the reasonable and informed third-party tests. So with that conceptual framework and applying that, we hope that the firm would be able to reach the right conclusion. So it should consider any type of payment that it receives from the audit client for purposes of evaluating the threats, and it should also think of, apart from payment in monetary terms, any payment in kind as well. So not to restrict your mind to just fees in monetary terms. So it could be Bitcoin or some other cryptocurrency that needs to be considered. But at the end of the day, it is important that this information is also discussed with those charged with governance in the case of a PIE audit client, a PI audit client. And in that discussion with those charged with governance, it's not just about telling them what the fee is, but information that will help them understand the context of the fee.
Thank you. And that gives me a nice segue to the next question about in-kind things. David, probably a question for you here, talking about the hospitality sector in the GCC, and not hospitality sector, sorry, hospitality in the GCC. And you have been living in Dubai for quite some time, and hospitality in the region is very different from what's there in Singapore or other region. How hospitality in the GCC with auditor independence in mind, how do we handle through the code? So I think it's, lavish gifts. I remember my days of audit, when the audit would finish, a client would try to invite to the 7-star, the only 7-star hotel in the world, for a audit end lunch, which we would have to decline every time. But these type of things are very common, getting an iPad or a nice watch and gifts and all. So how do you keep that in mind with the code, David?
Yeah, so it's probably not one for NAS and fees, I think, Naweed, but certainly something that is handled within the code itself and in a different section within the code, and of course that would be under the inducement section. And you really have to again apply the conceptual framework when looking at these things, and you have to address all the facts and circumstances in and around the purpose of the offer of perhaps a gift or hospitality, and determine that really that is the right thing to do, given all the circumstances, and of course with reflection upon the national jurisdiction as well, and how they view these things. But that's it, just in the high level. And the code does provide great provisions to deal with that situation. And so I encourage the asker of the question to look further into that part of the code.
And Naweed and David, maybe I can add on. So in the inducement section, and inducement applies not just for professional accountants in public practice, but also professional accountants in business. So the first part is if you are receiving a gift or hospitality that is in breach of the law, so it's a non-compliance with law or regulation, then it is prohibited. So the professional accountant should not be accepting that. But if it's not in breach of the law, but it's with the intent to inappropriately influence the recipient, then as the party giving, I should refrain from giving that gift or hospitality. And as the party receiving, if I'm aware that it is being given to me with an improper intent to influence my behavior, or with the intent to improperly influence my behavior, then I should deny, or I should not accept that gift or hospitality. And in the third scenario, where there's no ill intent, I still have to apply the conceptual framework, and I still have to assess whether there's any threat to my compliance with the fundamental principles, and in the case of an auditor, my compliance with independence requirements. So using the conceptual framework helping me to guide in the decision that I make. And as David said, taking into account, the circumstances, the facts and circumstances. So for example, Naweed, you mentioned a dinner at the end of the audit engagement or a project. If the parties involved are not just the auditors, there's many other people involved in who had a part to play in that project. If they're all invited to that dinner, then we're just one of many. If that dinner is requires us to be flown by private jet to a different location, then that might be something that you need to consider differently. I hope that helps.
Certainly. A question from the floor, and it's again a Dubai UAE specific non-assurance services provided through network firms that form separate legal entities within the UAE, but for the same network. So we have a concept of free zones and mainlands, which David is very much familiar with, but for international purposes, we will talk about affiliated entities here. What's our views, or what's the code? Is it captured by the code if the services are provided by a separate legal entity on paper or on the form, not in substance?
Yeah, thanks, Naweed. So again, as Caroline just ended in the last answer, it's about facts and circumstances again, and particularly what type of service is being provided, But of course, there are stipulations within the code which include the provisions applying to firm and network firm in the same breath. And so this really goes down to the definition of audit client and who the target audit client is for the provision of non-assurance services, whether it be a non-PI, a listed PI, or a non-listed PI. And of course, the related entities that we look at in the audit client definition are different, and depending on the type of audit client that a firm's wishing to provide a non-assurance services to. And therefore, so that analysis of looking at where the services are provided, whether or not in respect of the self-review threat and the creation of that, and the looking through the lens to find out if it might create a self-review threat, then we'd be looking at the ability for that to create a self-review threat at the audit client level. And you would assess that both at the downstream, so the controlled entities, also at the parent level, and the commonly controlled, again depending on the related entities that belong to that type of audit client. So it is important, and I'm afraid you don't get away with providing a service to a legal entity unless it's outside the network and doesn't belong to the network itself. So you have to bear in mind lots of different facts and circumstances in that play.
Thank you, David. A fresh question just arrived. There are talks locally here of certain regulators possibly prohibiting all non-audit services to audit clients without exception. Would love to hear thoughts from the panel members about such a move and how it relates to IESBA rules, which clearly allow certain permissible non-audit services to audit clients. Before I hand over the podium to both Caroline and David, I can certainly clarify that DFSA strictly follows the IESBA code, as Chris mentioned, and we have strengthened the code with additional 3 non-assurance services which are prohibited in the context of DIFC, which is the internal audit service, provision of finance services, preparation of financial statements, and compliance related services, which is a very specific model to DIFC. I'm not aware of other talks around, but assume that it's correct. Let's hear maybe David and Caroline, you can give,
yeah, thanks, Naweed. So it's not our place as international standard setters to comment on the facts and circumstances surround the reasoning behind why local regulators choose the path that they choose. But we looked at this from a global perspective as part of the non-assurance services task force. We looked at the possibility of looking at a prohibited list of services, a blacklist or a whitelist. But I think the position we took was that we were able to deal with a lot of the public interest concerns and issues by tackling the real or prominent threat in the marketplace to auditor independence, and that is the self-review threat. And I think through the self-review threat prohibition, you tackle and put in the place of prohibited services a number of services that create the issues from the public interest and actually the perceptional perspective as well. So I think that's the reasoning for having taken that course of action that we took. And remember as well, I think blacklists and whitelists are not evergreen. And of course, as a market changes dynamic, there may be a requirement to then revisit an absolute ban or a blacklist or a whitelist of services on a more regular basis. And I don't think that creates consistency in the medium to long term. And that really is part of the reasoning behind why the International Ethics and Standards Board and the Task Force on Non-Assurance Services took the position that they took. But I, of course, am aware, being a practitioner within the region, that we do have some jurisdictions which choose to take that approach. And I think the non-assurance services provisions and possibly even the fees provisions add back transparency to the whole discussion with those charged with governance. It adds back trust into the auditor space. So I'm hoping that that regulators across this region and globally take heed of these very high standards, which the International Ethics Board is very proud of, and see that it really creates what I think prohibited across the blanket bans are trying to achieve, and that is trust in the auditor judgment in respect of provision of non-assurance services and the level of fees. I don't know, Caroline, if you wanted to add anything from the fees perspective on that.
Thanks, David, and thanks, Naweed. Really, we do believe that the code that we have is a robust code that is fit for purpose and that serves the international community well. And so it's a code that is globally applicable. In certain jurisdictions, I guess, you know, the national standard setter would have to make adjustments for their own jurisdictions. And as David mentioned earlier, in terms of the non-assurance services, what we have in terms of the provision around might create a self-review threat, we feel is able to withstand the test of time. Whereas if you have a blacklist of prohibitions, then, you know, how engagements are structured could change. And if it's structured slightly differently, does it then fall outside of the prohibition? So our code is really principle based, and when we rolled out the role and mindset pronouncements, we also made it clear that applying the code is not just about applying the letter of the code, but the spirit of the code as well. And we believe that if you follow the conceptual framework, it will lead you down the right path.
Yeah, and I think that's the point, isn't it, Caroline? This whole idea of guiding principles, and you know, if I look at the code and as I apply the code in the marketplace, I inordinately find less questions about the application of the code than I do when I'm looking at a blacklist or a whitelist of services. There are many more questions generated because of what you've just highlighted, in that they can never be evergreen and can never really fit a situation in the marketplace. And so I concur with what Caroline has said there.
Then
Thank
from
you.
a fee perspective,
sorry. Go ahead, Karen.
sorry, just very quickly, from a fee perspective, when we think of independence, it's independence in mind and appearance. And, you know, we have provisions that deal with making sure that the auditor or the firm is independent in mind. And the transparency is the piece that provides that appearance or addresses the appearance that the auditor might not be independent.
Thank you. We still are getting questions, but I'm just cognizant of the clock on my laptop. We have one more opportunity to take a question. I think it should be a short answer, David, and it's about tax services. Prohibition against assistance with resolution of tax dispute. Tax dispute resolutions takes place at various levels with the revenue authority itself and in court. Is there any differentiation, or is all the tax dispute services are assistance which are prohibited?
Yeah, there definitely are differences in there, and of course, notwithstanding what the local regulator or the local national standard says about these types of services, but I think for the most part, these types of services at the very sort of middle level of them don't appear in what would be a prohibited list derived from the code itself. But again, it's facts and circumstances, and it's about the forum, of course, in which you are representative of the audit client. And of course, it's about whether or not you're providing services in the background and not at the front line in front of a particular forum as well, and whether or not the client themselves have taken entire responsibility for all the underlying mine. So there are many parts of the code at play, I think, when we try to apply and find out whether or not we've got a permissible service in this space. But this is not an outright prohibition per se. This again is looking at facts and circumstances.
Thank you very much, David and Caroline. If it's in my hands, I would continue for another hour. I know Caroline has, she's on the end of the day there. We're still in the middle here. But it's an interesting discussion. And let me tell you one thing. The number of regulators are on this call today on the audience side, and they are listening to your views. They're listening to the questions, and I'm sure this will instigate some good discussions between ourselves. We do talk amongst ourselves when we are making policy decisions, and it's the best of the coordination and cooperation right now between the audit regulators in the UAE and in the region. And I'm sure if these arguments have any substance, the regulators would consider them and ensure that the IESBA code is applied consistently. We have seen the benefit when the DFSA got them into the rules almost a decade back, and it's very beneficial for us to flag post the rules directly to the IESBA code, because it makes the life very easier. Before I let everybody go, it will be unfair to thank my team between three organizations, Astu, Cam, Diana, Sylvia from IESBA, Mary, Kaja, and Shekha from DFSA, and Akram and Amna from AAA. What it looks to be a seamless presentation on the front. It has countless hours, and somebody moving the presentation from New York early in the morning before even the office starts. It's a dedication to the work. So thank you all. Thank you to all the audience who came today and attended. Those who missed this session for various reasons, as David mentioned, the recording of this webinar will be available on IESBA side. If you want to download the presentation on your panel, there is a tab of handouts, and you will be able to download the presentations as well. We will look at all the questions and we will try to answer, whether we do it in a public domain or we answer you in private, but we will try to do that. That's my promise to you. I will get the answers from Caroline and David on that. With that, I wish you, those who are in UAE, a happy long weekend. We break for a longer weekend this week, and enjoy the weather wherever you are. Stay safe, maintain the distance, and follow the regulations of the land where you are from. And I'll see you hopefully in our next session, possibly face-to-face and in person. I would like to close the session today then. Bye.
Bye.